Welcome back to the Retire Young radio show. I am your host, Joshua David, having a great time in studio and really on a mission to improve that financial literacy worldwide. Al, as we talked about in the last segment, we talked a lot about how the markets work, but there's a lot of opportunities right now, right?
Right.
And in the financial markets, the smart money, they're the ones that are creating these moves. They're the ones that are always making money and profiting off that. So we're seeing a lot of people that are coming to these investing classes want to understand how they're doing that, how the smart money is creating income. But here's the key. Let's talk about why it's so important with the opportunities that we're seeing right now to start now.
Yeah, these are some of the best opportunities we've seen for a long time. That doesn't mean that there won't be more coming down the road. But the reason that we feel it's so important now, why there's urgency there, is that we're getting closer to a vaccine for this coronavirus. And then pretty soon the economy is going to start returning to some sort of normalcy. Probably not the same as we've seen before, but anytime we go through a crisis, new opportunities are created. And the same thing is going to happen right now. So it's important to be ready. It's not too late if you've missed out, if you've been sitting on the sideline. But the more opportunities missed now means that your money has to work harder tomorrow. It just gets down to the power of compounding. You know, and the core principle of finance holds that if money can earn interest or a return from something, any amount of money is worth more the sooner it is used. Simply put, your money is generating new earnings from previous earnings in addition to the original principal. That compounding has often been called the eighth wonder of the world.
Yep.
So the longer you wait, either the less you're going to have or the harder your money will have to work. And understand that the market is a forward-looking thing. But right now it's way ahead of where the economy is, and the economy hasn't had a chance to catch up yet. So at some point in time, these high market values have to be earned or deserved. So something is going to happen. We're going to have movements probably in all three directions that we talk about, up, down, sideways, all of which are going to provide opportunities. So this is a good time maybe to ask yourself this. This market has been doing well, but what if the market crashes? What are you going to do? How are you prepared for that? What if it keeps going up? How are you going to get the best use of your money? And the bottom line is be prepared for both, because either one or both could happen.
You're right. And we talk a lot about the stock market on this program, and let's dive into that right now. Why is the stock market such a great opportunity right now? Because we're seeing volatility. That's what you want to see. I mean, we talk about that every single week. Let's dive into why and how the smart money is using that stock market to create the income then.
Yeah, and the stock market is only one vehicle that they use, but they're not just buying stocks and holding on to them long term. They may be doing more short-term trading with stocks, which as individuals, as individual traders, investors, you can do, but they're also using other assets with their equities, options, for example, to boost the returns and provide protection. Stock or equities are probably the best asset that there is for building up long-term wealth for that, what you require in your retirement years. And there are other assets in addition to stocks that can be used for more short-term. And there's really two primary reasons that people enter the financial markets. One is to obtain additional cash that they need now, and the other is to build wealth for the future, for later in life when you retire. And there's a different way to approach each of those. Stocks are the best vehicle for that long-term wealth buildup. But if you need extra cash now, well, let me take a step back there. Typically, the financial advisors, when they put their clients into stock, really it's more often than not in mutual funds, which are baskets of stock, maybe some individual stocks. But then the advice is to hold on. Look at it as a long-term hold, maybe multiple decades.
We're in it for the long-term play here, guys.
That's exactly right. So you don't worry about these drawdowns or crashes because the market will always come back. And you know what? They're right. It does. But every time a portfolio loses value, it has to make up more value than it lost just to get back to where it was before. And what's wasted there is time. There are periods of time we go through where it could be even maybe 10, 20 years before the market or assets will get back to where they were before. So that's wasted time, which none of us really have enough time to waste. It's a decaying asset to begin with.
People don't really think about that. They always say, "Oh, it's going to continue to go up," but they don't think about that lost time.
Right.
That's the problem.
Sure. And if you look at this market, if you were in the market, say in January and February, and you were feeling pretty good because you had some nice returns, and then all of a sudden a big part of that was taken away through March. Well, and now you're saying, but I'm fine. I stayed in, I held on, and I'm back where I was before. Yeah. Well, that really wasn't gain. That was just lost recovery just to get back to where you were before any real gains could be achieved.
And that's the human nature of it. Everybody says, okay, I've been doing good the last 4 months.
Correct.
Because they're conditioning themselves to think, okay, this is what I'm going to think about and talk about. But in reality, that's not what's happening longer term.
Yeah, and I think what they're forgetting also is when the market goes down, it doesn't mean you either have to get out and sit on the sidelines or lose. There are ways of profiting and benefiting in a down market. There's strategies that can be used in up markets, strategies that can be used in down markets, and strategies that can be used in sideways markets.
And that's the key, is understanding the different opportunities, because there is 3 directions. You have 3 opportunities, whether it's going up, whether it's going down, also sideways. And I want to continue this discussion about that human nature, Al, because, people condition themselves to do certain things. I mean, us as humans are probably the biggest procrastinators. So sometimes taking action is just the only thing we need to do. And a lot of people say, "Oh, I'm going to wait until my ducks get in a row," or "Wait until next month," or "Al, this is your favorite one. Wait until the fall." Right?
Right.
But
right.
Taking action of these opportunities is improving that future. And Al, it all comes down to that. Whatever you want your future to look like. And, you teach a lot of these investing classes as far as how the smart money uses the stock market to create income, how they're utilizing other assets as well. We're going to get into those. Al, let's continue this discussion on the smart money, how and why they're creating income no matter which way this market goes. So before we get into those other assets, you mentioned strategies for down markets.
Right.
Now, what is that called, and what's the concept? Let's make it easy for our listeners, but then let's get into those other assets.
Yeah, well, actually, there are 3 primary ways of participating in a down market. One that probably most people have heard of is shorting the market. Many people have heard of it, but really don't understand it. But that's what the big players use. And it's a way of participating when something is going to go down in value. And actually, it's participating with something you don't even own. You are borrowing it from a broker. So let's say you want to short IBM stock. Well, you borrow shares of IBM stock that you don't own, sell them, so now you don't own them anymore, with the commitment that you're going to return that particular stock back in the future. And the goal there is to sell it at a price, let's say you sell it at $100 a share, and then you go out and you buy it back at $50 a share when you're going to return it. Then you have a $50 profit there. That's shorting. You can short individual assets. You can short the markets in general, primarily through exchange-traded funds.
Yeah, just to make that simple, though, Al, I mean, there's a lot of conversion there of changing hands with shares and stuff. It's really all done electronic. So it's just
right.
Open and close. Whether you want to open it at a high price and close it at a low price for that profit, just like buying low and selling high.
True,
Same thing.
You're never really taking physical possession of something. Basically, it's pushing a button to sell and pushing a button to buy it back. It's very simple, but it's just a hard concept for people to understand. And we kind of clarify that in the classes that we have here. But if somebody's looking at cash that's needed now, extra money now, and you're talking about short-term trading like that the institutions do, well, you have to use a short-term trading strategy. For some people that are looking for that additional cash now, they might have a fixed income account or a bond portfolio. Well, think about that for a minute right now. With the interest rates that are being paid, when you take out inflation and any fees, typically or very often it's a negative return. Like the 10-year governments right now, they're trading about 0.7%. When you take inflation away, that's a negative return. So
inflation's around 2% roughly.
Yeah. So the typical fixed income strategy just isn't working the way it used to. So what are some of the other ways you can do that? Well, you can use options. Options can be used in down markets as well as up and sideways markets.
Al, I wonder, just clarify. And sorry to interrupt you, but
no, that's okay.
We have a lot of listeners that have understand how CDs worked back in the day. Interest rates were high, and that's how a lot of those people invested. They put money in CDs, and they had money in savings accounts, and they were interest, right? Now all that's gone. There isn't any returns with those. Now they're not sure what to utilize.
Right.
So that's why understanding these other assets is so important, and that's why we talk a lot about these every single week.
Right. And it really gets down to what you know. And people know stock, they know mutual funds, and they know CDs. Those are things that they've kind of been conditioned to pay attention to. And when we talk about options in the futures market and the foreign exchange market, there's some fear there because it's just the unknown. They don't know what they are. They don't know how to take advantage of them. And unfortunately, some people that don't know very much about them try to use them, which is probably the worst thing you can do. And the fear of the unknown is taken care of by knowing what you're looking at, getting an education on it.
So what is the futures market?
Yeah, the futures market is, and basically with the futures market, you can trade a number of things. If you are a stock trader and you say, I don't want to do anything other than the stock market, you can trade the major stock markets. Futures is basically looking at what something is going to be worth in the future. And if it's going to be up in value, then you would take a long position. In other words, buy a futures contract.
So think about that. You said if you want to trade the equities markets, you can do that with the S&P 500. People do that with their retirements, with mutual funds. It's just a basket. It's kind of the same concept. It's just a different asset.
Yeah, and the S&P 500 is one. You can trade the Dow, you can trade the NASDAQ, some foreign markets. So you have some variety there that you can choose from if you want to trade in the stock market.
Talk about the buying power.
The buying power, well, that's one of the great things about futures, Forex, and options is that they have leverage. And that leverage really just is giving you more buying power. It's lowering the financial barrier to entry. And the leverage, depending on what you're trading, could be anywhere from maybe 10 to 1 to over 100 to 1. And with the futures market, in addition to the stocks that you can trade, you can participate in, you also have access to the commodities market, to gold, silver, oil, commodities, interest rates, a number of different things. And by the way, if you're looking for diversification in a portfolio, which is an important part of any portfolio, the futures market is the best diversified asset grouping that there is, because there are a lot of things that are just not correlated at all to each other. Commodities, for example, corn, sugar, soybeans, they don't care what the S&P 500 is doing. So you can be long some things, you can be short some things, and participate regardless of which way the markets happen to be going.
That's the key, Al, is to understand that proper diversification, because a lot of people think, well, hey, I'm going to be in oil stocks and tech stocks, and there's thousands of stocks out there, and they feel they're diversified because they're in a bunch of different stocks. Well, if the stock market goes down, they all go down. So when you're diversified with other assets, there's correlations, but there's also inverse correlations. So as certain things are going down in the stock market, there's certain things that are going up in the futures market. So it's understanding how that really works. And these techniques and these concepts, they're not new. They just maybe a little bit different if you haven't heard about them. And that's why when you teach these investing classes, you really dive into and dissect the futures market. We didn't even get into the Forex market. We'll go into that in the next segment with the options market. But there's just more opportunities that are out there than people really know about. So now is the time to understand those, especially with the great opportunities these markets are presenting us. Al, we've been talking about this the last couple of weeks, about this retirement crisis. People just don't have enough to retire. I don't believe the average savings is right around 10 grand or so. Don't quote me on that, but something like that for the average person. Now, understanding the different techniques that the smart money is using, that's what you want to understand to invest like them. This is Josh and Al. We will be right back.